Hello and welcome to this session. This is Farhat, in which we would look at certain expenditure that require special attention. In other words, they deviate a little bit from the general rules. Specifically, in this session, we will focus on what we call compensated absences. Now, we would look at all of them: pension, claims and judgments, material, supplies and prepaid, capital asset, debt service expenditure, capital asset acquisition, on all of them. But today, we'll focus on one topic only, and that's compensated absences. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
So what are compensated absences? Well, compensated absences represent benefits earned now. So what are compensated absences? Compensated absences represent benefits employees earn now. You earn now, but you would receive the benefit later. What are we talking about here? Let's assume you're in year X6. You work for a company for the full year. After you work for the company, if you work 1 year for them, year X6, you would be qualified to take 2 weeks of vacation. Now, when can you take those 2 weeks of vacation? You can take those 2 weeks of vacation maybe in X7, maybe all the way to X8. I don't know. Maybe you can carry them all the way 5 years and keep on rolling those vacation time. So you did earn them. So those 2 weeks are compensated absences. So if you were not at work, you were on vacation, we will pay you. Those are compensated absences. So you earn them in one period now, but often not paid until several periods later. So if sometime you could also take it in X6, work in X6 and take the vacation in X6. But the point here is you earn them, but they did not pay for them yet. Now the amount to be paid is often uncertain. So you might be saying why. Let's go back to this year X6. When you work in year X6, and let's assume for the sake of illustration, you were making $60,000 per year. Then when you took the vacation in year 7, and let's assume in year 7 you got a big promotion and now you are making $90,000. Guess what? When they pay you those 2 weeks in X7, year 7, they will pay you based on your current salary. They would not say, well, when you earn those vacation times, you're making $60,000. No, they have to pay your current salary, which is $30,000 higher, whatever that, 90,000 divided by 12. So you were making, if we're talking weekly, on a weekly basis, 60,000 divided by 52 weeks. If we take $60,000 per year and we'll divide it weekly, because we are looking at, I said you earn 2 weeks of vacation. We're not going to give you more than that. Divided by 52, you were earning around $1,153 per week. If you are making $90,000 per year, that your weekly rate is $1,730. They have to pay you this $1,730. That's why they say the amount is uncertain. No, so compensation is based on the salary, wage in effect when the time is taking. That's why we don't know exactly. Now, how much they will pay you. Now, GASB standard, GASB is the government-wide, the GASB, vacation leave and compensated absences should be accrued as a liability as the benefit are earned if both the following conditions are met. So when do you recognize it for accrual basis? Well, you would have to provide the service yet, so the employee would have to work for the company yet, and it's probable that the compensation will occur. It means the person takes the vacation. Probable they will exercise this time off and the company will have to pay them. And for vacation time, we all know people take their vacation. So example include unused vacation, sick leave, we'll talk about sick leave, and other time off benefit. So how these benefits are accrued and recorded differ between a business and a governmental entity because of the unique way the government manage their financial resources. Remember, for something to be an expenditure, as far the general rule is, you're going to have to pay for it this year or 60 days after year end. But it's always good to always first by looking at the private sector, the businesses, because if you're listening to this recording, most likely you know how private businesses account for this from an accrual perspective. So businesses follow full accrual for compensated absences to make sure all financial liabilities are reported. An employee earns 2 weeks of vacation annually valued at $6,000. Well, if you work that year and you earned the 2 weeks, the company is responsible for $6,000. That particular year, they will debit $6,000 of expense. They will credit $6,000 of payable, and now they have the liability recorded and the expense on the income statement. So if a company promises future health benefit worth $10,000 to an employee upon retirement, let's assume you work for a company now and they promise to pay you $10,000 per year for health benefit 15 years when you retire. Well, since you earned this year, you worked that year, they have to accrue it now. Therefore, they will debit an expense now, they will credit a payable later. And let me show you what I'm referring to here because I want to make the point before we move into the governmental. So for private businesses, let's assume this is year one. You started for this company year one, year two, all the way, and you're going to be retiring at year 15. So after 15 years later. So here's what's going to happen. Every year you work for the company. As soon as you're done with year one, what we're saying is the company will have to book $10,000 of expenses belong to year 15 when you retire. So you're working now, but they're booking an expense for 15 years down the road. This is how private businesses do things. They have to record the expense and they have to record the liability because they have to accrue it because the employee did perform their service. Now it's the business to record their liability. And this method ensures the matching principle being followed because you work in year one, therefore the 10K expense will have to be recorded in year one, and the liability, the 10K liability, would reflect the future liability in year 15. This is how businesses do things. So how do government handle compensated absences? Well, in a governmental accounting, vacation leave is treated based on the modified accrual basis in governmental fund financial statement. What does that mean? It means you recognize an expenditure and a liability. So vacation pay expenditure and associated liabilities are recorded when the payment is due, when? In the current budget period. This aligns with the principle of recording items that use current financial resources. We're back to the basic expenditure definition, the basic expenditure meaning. We record an expenditure and a liability and a correspondent liability when that expenditure will have to be paid from the current resources or the resources from the following year, and specifically 60 days from that following year. So any unused or accrued vacation leave that's not payable in the current period or 60 days after is excluded from the government fund financial statement. So what do we do with those vacation days? And I know a person that worked with the county. This is a real story. I'm serious. This guy earned, it's a he earned around 10 years worth of vacation times. So if he leaves, literally they have to pay him almost 10 years worth of just vacation time. He been working there for so long, he never took a vacation, he keep accruing his vacation. But as far as the government is concerned, it's not an expenditure for them unless they have to pay it for that year. So what they do, they keep track of this time on a schedule on a side. It's called schedule of long-term obligation to provide transparency about their future commitment. They know what's going to be available, but they don't record it in the fund, on the fund level. So in a government-wide financial statement which uses accrual on the government-wide, vacation leave is recognized as a liability when it's earned because they use full accrual. Remember, government-wide is totally different than fund accounting. Remember, we're dealing with fund accounting. We're dealing with expenditure. Now you want to go to Farhat, look at additional resources to reinforce these topics, whether you are an accounting student, CPA exam candidate, or studying for some sort of a professional certification. Invest in yourself and stay safe.